Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive right in, take a look, see what's going on today. If you want to follow me, it's @Finance. And if you want to join our community, finding-value.com, I dive deeper into all these topics, looking for investment opportunities and sharing them with everyone in the community. And you can see how to sign up there in the corner. Steven says oil rose as much as 5.7% at Monday's open after the U.S. struck Iran's three main nuclear sites and threatened further attacks. Those gains are now starting to fade. There are no signs that Iran is ready to carry out threats to block oil shipments through the Strait of Hormuz. And then he's basing that, I think, off of this particular move. So what I generally do is I say, okay, he's saying that the gains are fading in early trading, and that is somehow no signs that Iran is ready to carry out a strike. So the first thing I do is I go look at crude oil, and then I go and look to see what's going on. Well, in my opinion, there are stuff going on. Why? You've got a trend line that's coming up to the top here. You've got a touch point, touch point. There's a couple of touch points underneath this. You could pivot this like that as a possibility, but I left it kind of here and left this as a touch point. Now, it's the pattern that I focus on more than these little touch points, because a lot of people, they get all crazy over the specific touch points. That's not the case here. What I see is big up move, consolidation, false breakdown, and now we are trying to move higher. When you scroll in, we're sitting on top of the pattern, on top of that trend line, on top of, we're going to try to work our way through all of this resistance. So even if we get faded to some degree, we're still trying to go higher on top of a pattern. I hate to say it, that is not bearish, that's bullish. Bearish is if we were breaking down here. Bullish is that we are coming up. So I'm in the bull camp. No, I don't know what's going to happen in the short term. But on the longer, bigger picture view, we are trying to break higher, not lower, in my opinion. So when people come out and they say this information, I just look at it like, he probably doesn't know what he's talking about. Because why are we sitting on top of a large pattern that's broken? That's not bearish price action, that's bullish price action. And some of this could be a return move to the breakout, like a retest, back test. That very well could occur. No one knows with certainty. But a lot of people on Twitter, they talk so confidently about so many things. And I look at it like, I don't think that's right. What I do is I look at the charts and break down what the charts are telling me. And that's where I gain some of my insights. Now, also, you've got crude oil versus gold, which is at another turning point potentially, where we could see a reverse here in a falling wedge. So we've got a falling wedge, breakout, falling wedge, and this looks like we could break out here, coming from a ridiculously low level here. And this is a shoulder, head, and a shoulder, an inverted shoulder, head, shoulder. So when I look at this, everything I see is bullish, not bearish. And it isn't because I'm bullish on oil. I'm bullish on oil because the charts are telling me I should be bullish, and it's ridiculously cheap. Smart real estate bets. So he's responding to this. He says inflation is 2%. Jerome Powell is keeping rates at 4.5%. Explain that. You can't. And I'm glad that somebody with some sense comes in and says, for starters, inflation is not at 2%. And even if it was, it may not matter. Although Billy Boy can't seem to grasp the notion of strategic planning. I guess his broadcast journalism degree didn't prepare him to tackle anything that involves economics, math, or statistics. I favor the math and statistics side. And obviously, he's got Wayne Gretzky up here. He says, I skate where the puck is going to be, not where it has been. So a lot of people are using inflation's 2%. We should be lowering rates. That's not where the puck is going to be. The puck is telling me crude oil is going to outperform potentially. We're seeing breakouts in inflation sensitive assets. Soft commodities could go up. Oil could go up. Fertilizer's been going up and breaking out. That's inflation. That's where the puck is going to be. So you can't use backward looking data and say, oh, well, Jerome Powell's keeping rates high. I think rates are going to go up. Why do I think that? Because oil and rates are linked together. So I don't understand some of these people. It doesn't make sense to me. Go look at the charts, make some reasoning of what the charts are saying, go look at interest rates, and see what the market thinks. But Jerome Powell, I mean, he just does whatever the 2-year does anyway. Oil price projections based on how the situation with Iran, Israel, and the United States develops via Bloomberg. So they've got three potential outcomes. The symbolic retaliation against U.S. ceasefire with Israel. It goes down to $65 a barrel. That's what they have there. Symbolic retaliation against U.S. continued war with Israel, and it's basically trading sideways. And then substantial retaliation against the United States, a wider regional war, and then we go way up to $130 a barrel. So when you look at this, given where we're at, this is your risk and this is your reward. And it would be better to be long oil to play this out. Now, it's not better to be long oil because you're playing the war. It's better to be long oil because it's cheap as living crap. We're underneath the cost curve in the high cost producer areas. And we are at the second cheapest time in history of crude oil versus gold. That's why I'm long oil, not because of a potential war. This is all news based. Maybe it turns into something, maybe it doesn't. I don't really care. It doesn't matter to me. It's cheap. I'm going to be there, and we're in a commodity bull market. That's all I need to be there. I don't need this. This is all cherries on top. Iran is now calling on the Middle Eastern countries to sell United States treasuries. It says your treasuries pay for the bombs. Get out while you can. So maybe they're trying to tell people to sell their bonds, get those interest rates going up. Working on a theory that U.S. intervention in the Middle East is correlated to the 11-year solar cycle of sunspot activity. And there's your sunspot activity going up and down. Looks like it's peaking out here, 2024 and 5. Then we come back down for 2030. This was colder. I noticed it. It was really warm when I first came to where I'm living in this general area. It was warmer, and it was cold in 2020. And hopefully we stay up. I like it when it's warm. But I think that these are made up. I think we go to war to give an explanation of why oil is so expensive. I think oil is going up no matter what. And then they just create war or some sort of thing, and then they blame it on that. And these are all the things that they blame it on. So people are they're trying to find reasons for a cycle. And then they make up those reasons. This cycle here, corresponds incredibly well to the real estate cycle, if you look really close. 1980 was the peak of real estate, so was 1990. 2000, slightly thereafter, was the peak in real estate over here. We came on up. There wasn't a peak in real estate. Real estate's continuing to go up. Maybe we get a peak in real estate over here at some point. Maybe. I don't know. Here we go. Katusa Research. He says every major geopolitical crisis of the past 25 years sent oil soaring. From Iraq wars 147 peak to Arab Springs sustained 100 plus, and Russia Ukraine $130 spike. You know what's kind of weird? That spike in Ukraine, that Ukraine war came after that spike, and then they blamed it on the war. So I don't know if it was the market trying to price in something, and that's why people attribute the Russia Ukraine war, but I don't think it has anything to do with it. I think it was what has to do with it was money printing. This year was monetary expansion. This year was more money printing there, and this is money printing here. So tell me how this determined that. I don't think it is. I think it's just money being put into the system, putting oil into a shortage, and then oil goes up in price as a response. So I don't know if I agree with the reasoning behind price moves that a lot of people give these things. They're very subjective. Rick Rule says this chart suggests that the official inflation rate is understated. McDonald's pricing out prices have doubled over the last decade. So actual inflation of what they say is 31%, but every single fast food place that's on this chart is far above the actual inflation rate. So maybe your actual inflation rate, rather than 31% since 2014, is more like 60 or 70% in here in the middle. So I don't know. I mean, I don't believe the inflation numbers at all. I think they're absolutely manipulated to whatever they want them to say. Hedonic adjustments, substitutions. I mean, those two things right there, if you just look up those two things, you'll say, oh, yeah, these are just made up. Because you have to make up if something got better, you have to approximate how much better it got and then adjust something lower. In reality, if you're looking at, say, a clothes washer, right? So you've got a clothes washer, a washing machine. You look at it and say, yeah, okay, it's a machine that spins and then it cleans clothes. And they'll say, oh, but the machine uses 10 or 20% less water, therefore it's so much better. And I just look at it like, no, it's not. I mean, how much do you have to pay for this crap, too? Um, I hate to say it, but washing machines now are like, aren't they over a lot of them over $1,000? And I haven't bought one in a long time, guys. I bought a used washing machine. I bought a washing machine and a dryer when I purchased this house about a little less than 10 years ago. I bought both of them for $100 together. I spent $100. It's a Whirlpool commercial size washer, and I bought a just whatever came with it, the dryer. And I was like, dude, this is perfect. Nothing. The only thing I've had to fix on it were the things that spin in the middle. There's little plastic gears or teeth. I had to put a new piece of that in, and I had to put a new timer on it. The timer went bad. That's the thing that basically times each cycle. I had to put a new one of that on. But so far, it's been going pretty strong, and we run a lot of clothes through it. So someone telling me that a new washer is that much better than what I purchased, I think those washers back then are far more reliable. So I would say that the new washers would need to be adjusted even higher because they don't last as long. There's a lot more that can break on them. And then the replacement parts are crap. Daniel says closing the strait mainly affects Asian countries. Around 5 million barrels a day are sent to China via the strait versus only 0.7 million to the United States of America. So a lot of it's going to China, Asia markets. Brian says it's not just the price of oil that's a concern, but also the cost of shipping oil. Oil Brokerage Limited tells me that VLCC, very large crude carrier ship rates near the Persian Gulf could hit $100,000 per day if disruption in the Strait of Hormuz happens. For comparison, it was $24,000 a day just 10 days ago. So maybe if we see conflict in the Middle East, we could see tanker rates go up quite a bit if that occurs. Investment wisdom from Charlie. He says, I think the best road to human happiness is to expect less. I think that's true, though. My expectations are pretty low for the most part. And there's a few things in my life where I have high expectations of myself, my health, what I eat, all those things. At least that's what I care about. But most other things, I don't care. The less you care about materialistic items, more or less, you're going to be happier. And then you don't have to buy the crap either. And I don't know if that's a function of me just being cheap or frugal or however you want to call it, or it's just a mindset that I adopted really early and other people just never adopt that type of mindset. But that's me. I don't know. I don't get in the chasing the Jones things. Don't know. Great Marti says oil $300. Thanks for listening. And that's not only the Strait of Hormuz. Now the Red Sea will also be closed. I don't know what's going to happen. I don't get all bulled up over this stuff. The entry point was there. It put in a shoulder head shoulder bottoming pattern in crude oil. That's all I needed. I don't need all this news. Your bottoming pattern's there, and there's your break higher, and we're going to break out of this pattern and probably run to some ridiculous price. But this is all I needed. And now all the news is coming out telling you why this occurred. Perhaps that there was insiders that knew this information was going to come out. And that was before the Israel war. So maybe they're going to drive oil to $300 and all their buddies needed an entry point, liberation day with your tariffs. There's your entry point. And then they go into war here to reverse it all to the upside. Maybe that's what they did. Maybe they didn't. Tough to say. I don't know. But the pattern's here. The insiders knew about it, in my opinion. With the world less secure, maybe is that Qatar will realize that spending time and money, maybe it's the EU, and discussing endless regulations is not for the benefit of citizens. Reducing gas storage target ahead of next winter was a political mistake. Here's 2025. Look how low we are in European storage levels. We were way above. I mean, look at the delta here, the difference between 2024 storage levels and 2025. Can you imagine if we get another really cold winter and we don't get anywhere near this amount? Like, let's say we come towards the lower end here and we dive bomb it out of the cloud there, that range. We could see prices spike like mad. Could you imagine how bullish that would be for coal? Oh my goodness. I think it's coming. Major news from Iran. Iran's parliament officially approves closing the Strait of Hormuz for the first time since 1972. If approved by Iran's top security body, shipments of 20 plus million barrels of oil per day will be impacted. What's next? Let us explain. And there's a thread there, but I'm not going to go too far into it. I don't know if this is going to close, but I think most countries are going to want to keep this open for economic purposes. They don't want oil to spike to $300 or $400 a barrel. So they're going to keep it open, is my guess. Did the Saudis and UAE know about the potential strike on Iran's nuclear facilities in advance? See, this is where I think they do. Everybody knew this. Now, piece this together, guys. We've got the inverted shoulder head shoulder in the chart pattern. This was all before Israel, striked. Now listen to this. OPEC crude's exports for the first 20 days in June are 1.1 million barrels per day higher versus May. Saudi and UAE are higher by 870,000 barrels per day. That's no longer a timing issue. The increase is real. So they're increasing it. They're putting oil into the market. But it's almost like they knew this was going to happen in advance, and that's why they probably increased production. See, now you're piecing things together if you're thinking about this. It's like, wait a minute. They told everyone that they're going to increase production before an event happened. Then all of a sudden, this event happens. Then you get this shoulder head shoulder going on in oil, which is an accumulation pattern. It's a bottoming pattern. Interesting, isn't it? Interesting how that all works. And that's all I've got for today, guys. So I'm going to end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. It's the coupon code in the corner there. And that's all I've got for today. So we'll catch you next time. This is Finding Value.